Today is Wednesday, June the 24th, and you can see, first of all, that the volume has been higher today than it was the previous 2 days, but decliners led advancers almost by 9 to 1. And if you look at the color map here, it's just red everywhere. So the Dow was down 2.7%, NASDAQ 2.2%, S&P down 2.6%. None of this should come as a surprise because yesterday we pointed out this little trend line, which was support, and we had a longer trend line down here, which was support for the McClellan oscillator. And we were not oversold, but the market was acting oversold with the buying going on. Well, now we are oversold. And we've fallen down below the 100 line, but we still have, this is a possibility to repeat. If we're going to repeat the coronavirus drop or a portion of it, we're going to spend a great deal of time then below the 100 line. So let's look at the volume and the other charts that we have. The volume stack looks like this. So again, it's not the same volume that we saw on Friday selling, but if you combine Friday's selling volume with today's selling volume, you get the idea that the end of June might be looking like the market is looking for an opportunity to pull back and offload some of those profits that it's made since the coronavirus rebound. But today was all selling volume, as you can see. There was hardly any shares that were traded. Well, there were a few shares. There were 350 shares that were traded on the New York Stock Exchange that contributed to this up volume. And of course, the summation index continues to drop. So now let's look at the charts, because the S&P did something. The S&P, we had this drop here. We had this gap up here on June the 5th. We came back and we didn't even test it. We went right through it on June the 10th. We pretty much closed it here on June the 20th. And then we went through the gaps. But we've got another gap that we have here, and that's this one. So we're going to keep an eye on that gap because that's going to represent the upside. So the upside would be 31.88, and if you look and see in a couple of the top of the gap is also this very long trend line that goes back to, we have to look at a weekly chart to see where it starts, but it really starts back here in October 2006, but it really gets going in February 2004, November 2007. So that is a long-standing trend line, and that trend line is pretty much at the top of this gap. So we're going to keep an eye on that. But that looks like resistance. So if I had to say anything, it would be that the market is going down for the rest of the week, and it doesn't look very good until we get into July. And then, of course, you've got this go away in May, or sell in May and go away, whatever. But you might have the traders just backing off in July and August. Volatility index really didn't move all that much. This is the weekly, but if we look at the daily, click on the daily, we didn't see the volatility move that much. It did start to push up and then it pulled back. Let's see what the 5-minute SPY was, or the 5-minute SPX was. You can see that in the 5-minute SPX, the market dropped down. So that was the volatility index hitting its peak. And then the volatility index pulled back when the market started to make a bit of a rally, but it just sort of zigzagged for the rest of the day. So I'm thinking look for more downside. Apple, very nice pullback to 360. This is its weekly chart, and you can see where it is. Home Depot, still down below this trend line. This is the weekly chart. Now it's trading at the bottom of its weekly range. Support at 127.2 after clear rejection here at 138.2. So this was a fairly steep drop for Home Depot. It was down almost $7 at one point, but now it's recovered back up to 246. Caterpillar had a pretty healthy decline. I like to see that. So if you have all of your stocks covered with in the money short calls, I think that's a good position for you to be in. I could take a lot of pullback in the market and I still have a significant amount of premium in my short calls that will just accrue with time. So that's my strategy, is, as you know, to keep all of my stock covered with in the money short calls. And they have been in the money now for about 3 or 4 weeks, but I took them out when they were well out of the money. I've explained that enough, but if you have any questions, just let me know. Andy asked me to do an explanation on something called the wheel strategy, which is really just selling puts. And if you look back at my videos, I did a 4-set video on how to sell puts, how I sell puts, and it's around April the 1st. Andy, take a look at that and see if that satisfies your requirement. If anybody has any questions about selling puts. Once my stock gets taken away in August, September, and November, because I've got calls spanning those 3 periods, as I lose the stock to the in-the-money calls, I plan on selling puts. And as we get closer to that, I'll tell you which puts I'm selling, but they will be Caterpillar, Apple, and probably Home Depot.